stocks are ushering in President-elect Joe Biden's tenure in office near record levels and with gains that underscore much of what's been driving the market to new highs. Blowout corporate earnings results, massive fiscal stimulus and optimism that an economic recovery should be well underway thanks to widespread vaccination. Today's political pageantry in Washington represents the dawning of an era of renewed certainty, stability and the return to established norms, all of which the markets approve, says Nigel Green, the founder and CEO of $12 billion advisory DeVere Group. Despite the inauguration pomp and ceremony at the Capitol, however, investors' focus is now on Janet Yellen, who will take over from Steve Mnuchin as U.S. Treasury Secretary. As Federal Reserve Chair, she continually made the case for full employment, meaning she is prepared to spend and her track record proves it. Green notes that with Yellen heading up the Treasury Department, investors should expect massive spending combined with continued ultra-low interest rates, for years, which should act as a catalyst for stocks. Boosted by the best stock market performance between Election Day and Inauguration Day in more than 5 decades, President-elect Joe Biden is set to inherit the largest U.S. stock market on record, boasting a total valuation of more than $40 trillion. Per Crisafulli, stocks have been largely driven by massive stimulus, vaccine optimism and record earnings, all of which are still raging on. Earnings-linked headlines in the last 12 hours were nearly universally positive, he notes. Global stocks were mixed Wednesday, with the United Kingdom's FTSE 100 roughly flat while Japan's Nikkei 225 ended the day down 0.4% and Hong Kong's Hang Seng Index climbed 1%. Big numbers showing the stock market's wild rise since Biden was last in the White House. Forbes, stocks soar. Dow Jumps 200 as Goldman Sachs, Bank of America beat earnings expectations. Forbes, Ether's market value surges $20 billion in one day while Bitcoin prices slow. Here's why. Forbes.